Good morning, and thank you to those of you who have joined and have interest in our fiscal outlook report. Today, I'm joined by Ann Hollingshead, who is our general fund analyst with that assignment for our office, and she's also the lead author of this report. But it's truly an office-wide effort to put together our fiscal outlook. So we also have our two chief deputies, Carolyn Chu and Anthony Simbal, on the call today, as well as our 7 deputies from across the different units of the office. And so we're all here and available to answer questions you may have after I go through some opening remarks. And what we'd ask is if you could just use the raise your hand function at that time. We will go in order and unmute your line, and you can go ahead and ask your questions. So in terms of the structure of this year's fiscal outlook, we have our traditional questions that we address in here, which are what is the state's fiscal condition for the coming budget year? And then secondly, we look ahead across a multi-year period and ask the question of, can the legislature anticipate there being capacity for new commitments as well? But then this year is a little different because the outlook also addresses a third major question, which is, how does the state appropriations limit affect the legislature's budget choices? I acknowledge that this question is somewhat novel for us to focus on in the outlook, but according to our estimates, the state appropriations or GAN limit, which is a provision of Proposition 4 from 1979, will likely be a major consideration for the legislature in this coming budget process. So I'll touch on that in a moment, but first, I'd like to just start with a brief summary of our estimate of the state's budget condition for 2022-23, the budget year. For that, I would direct you to take a look at Figure 1 in the report, if you have it in front of you, which shows that under our current law and policy approach, we estimate the general fund revenues will reach $202 billion in the budget year and result with a surplus of about $31 billion for that budget year, the budget year. The surplus really reflects 3 trends, plus the $4 billion that was in the state's discretionary reserve, the Special Fund for Economic Uncertainty, or SFEU, in the enacted budget from 2021-22. The 3 trends include, first, that revenues for the prior year and the current year are now estimated to be about $28 billion higher than when the budget was enacted. Secondly, offsetting that, as you are aware, Proposition 98 requires that approximately 40%, or roughly $11 billion in this case, of the higher revenues be allocated to schools and community colleges. And then third, we estimate that various expenditures are on track to come in about $5 billion lower than what the Budget Act assumed. And then finally, we're estimating an operating surplus of about $5 billion in 2022-23, an operating surplus where we just mean that current year revenues are higher than current year expenditures. So when you put all of those numbers together, you come up with the $31 billion that we're estimating for the surplus. Now looking ahead, the next question about whether or not the state can cover or has the capacity to cover new ongoing commitments, the short answer to that question is yes, because over the longer term, we estimate that there will be annual operating surpluses of around $3 billion to $8 billion annually. So for that, I'd point you to Figure 6 in our outlook, which helps depict that. Now, of course, actual revenues could be better or worse than this, and that will largely hinge on future revenue performance. Here you could take a look at Figure 12, which does show that for the 12-month period ending in September of 2021, revenues grew at an annual rate of 30%, the fastest in the past 4 decades. And so, it really was a key driver of these recent surpluses. These increases have been fueled by stock market valuations that have doubled since their pandemic low point and helped drive capital gains higher. But also we've had a period of uncommonly strong income withholding taxes corporation taxes, and sales taxes. So fairly broad-based strength across our state's revenue base. And while we can never say for sure what will happen in the years ahead, we assume that these trends will moderate. In the final years of the forecast, we assume that annual growth, after settling down from the more torrid growth rates in the current and upcoming year or so, we assume that revenue growth will moderate to kind of its historically typical rate of about 5 to 6% per year. Now, if you were to think about the range of possible outcomes for revenues and put it on a distribution curve, our projections are intended to represent kind of the middle point in that. So in other words, it's another way of saying really that actual revenues are about as likely to come in above our estimate as they are to come in below the estimate. And we estimate that the budget would remain balanced even if revenues came in about 4% lower than what we estimate. So there's a bit of a cushion in our surplus estimates, but it's not what I would describe as a major cushion. I mean, it's certainly plausible that we could have lower revenue experience than that. Now, all of this that I'm saying about the surpluses really cannot be fully appreciated without recognizing the role of the SAL, or the state appropriation limit, this year. And that's really the third major question that we address in our outlook, which is, how does this affect the legislature's budget choices, or the deliberations to come? So here I would point you to figures 5 and 6 in the outlook. And what it shows is that under our estimates of revenues and spending, again, which are based on our assumption of current law remaining in place, the state would need to allocate about $14 billion to meet the constitutional requirements under the SAL across the prior year and the current year. And as a reminder, to meet those requirements, the legislature could reduce taxes, spend more on excluded purposes such as infrastructure or capital outlays, or third, issue tax rebates and make additional payments to the schools and community colleges. In addition, I would note that while there's a lot of uncertainty about these figures going ahead, we also estimate that there's another $12 billion in additional SAL requirements that are going to have to be met in the budget year 2022-23. But of course, those are going to be very sensitive to revenue estimates, and undoubtedly, when the governor's budget is presented in January, they will have different revenue estimates, and they will also incorporate the governor's proposals for how to spend discretionary resources in particular. And so the discussion at that time may look different than how we're talking about it. But based on our approach to looking at the state's fiscal condition under this current law and policy basis, we wanted to put this out on the table for consideration. And along those lines, we do believe that early action by the legislature is something that should be considered, because if there is no action taken and we do wind up having a significant SAL issue and only turn to it in May, it really puts a lot on the table for the legislature to grapple with as they're going about all of the other deliberations that have to take place in the final weeks of the budget year. So that's why we think there could be some advantage to acting somewhat earlier than that on these issues. The other thing we put out there for the legislature to consider is that more reserves are warranted. Under our estimate for revenues for 2022-23, the balance in the state's constitutional reserve, or the budget stabilization account, would reach about $21 billion in that year. Well, that's a healthy reserve level, but I would just point out that compared with the pre-pandemic level as a share of revenues and transfers in the budget, it's actually still somewhat below that level. So coming into the pandemic, we had reserves that equaled about 13% of revenues and transfers. And now at the 21 billion level, we're going to be at about 10%. However, making additional deposits into the reserves, those deposits themselves would not be excludable from the SAL. So that's going to represent, something that the legislature will have to consider the trade-offs involved in making such a choice. I would like to note that we don't include it in our discussion of total reserves, but the Proposition 98 reserve does reach 8.3 billion in the budget year under our outlook. It's pretty, historically large balance in that reserve. But the reason that we don't include that in our discussion of total reserves is because withdrawals are intended to supplement the constitutional minimum spending level for K-14 education. And because of that, they don't really help the state address a budget problem the way our traditional reserves do. And just in general, the legislature has less discretion over the use of those reserves. They're much more dictated by funding, constitutional formula. So the final note that I just want to end here with is on Proposition 98, actually, which is how we talk about, sometimes we refer to it as a budget within the budget. And in our outlook, the Proposition 98 minimum guarantee would reach 105.3 billion in 2022-23. And we estimate that there will be about 20 billion available for allocation by the legislature for the K-14 programs. This is made up of two main components. The first is there's about 10.2 billion in one-time funds available thanks to upward revisions in the prior and current year to the minimum guarantee. So those are one-time resources. But then in addition, even after accounting for the cost of a 5.35% COLA and the additional deposits to the Prop 98 reserve, we estimate that the legislature has 9.5 billion in ongoing funds for available for allocation in 2022-23. So I think for both the non-Proposition 98 side of the budget and for the Proposition 98 side of the budget, these surpluses that we're describing are really some of the largest that we've ever presented in a fiscal outlook. But of course, you really can't talk about them without also acknowledging the important role that the state appropriations limit will play this year. And if you add up the state appropriations limit that we estimate will trigger requirements of about 26 billion for the current and prior year plus the budget year, those two amounts add up to about 26 billion. Those represent a significant portion of our $31 billion overall surplus that we're estimating for the budget year. So we think it will turn out to be a pretty significant issue for the legislature to consider in this coming budget process. Okay, so with that, I think I and our staff here at the office would be happy to take any questions you may have. Mike, if you want to help us administer those.
Thank you, Gabe. So if you have a question, please raise your hand through this application. I'll prompt you to speak, and then if you would state your name and your affiliation before your question, that would help us out. Thank you very much. Okay, Emily, go ahead.
Hi, this is Emily Hoven with Cal Matters. I wanted to ask about school funding because even though it sounds like a lot of money is going to be set aside for schools, there are a lot of stories about schools running out of money and consolidating campuses and, not being able to, needing to plug really massive budget holes. So how are those two things simultaneously possible?
Thanks, Emily. It's a good question. I do know that definitely what we're talking about here is sort of from a statewide overall perspective, but I would think maybe my colleague Edgar Cabral could perhaps offer a bit of additional insight here.
Yes, hi, Edgar Cabral. I cover, I'm at the K-12 unit at the LAO. I think part of the issue, these are our projections of revenues, and I think from a school district perspective, when they're thinking about their planning, this is not something that they're incorporating or doing quite yet. So if our outlook the numbers in our outlook were to sort of take effect, then we would have a budget that includes additional augmentations. I think that would change districts' fiscal situation. But I think in terms of the issues that you're hearing about, the things that we've been hearing a lot of are, for example, declining enrollment and the effects on school budgets associated with that. That's definitely something that from the data that we see, we have seen a decline in enrollment. I think one of the big questions is the degree to which some of that decline is resulting with students just being kept home during the pandemic, or whether that's a more longer term effect, because we have been in a decline in enrollment for the last decade or so, but the magnitude has been much greater during the pandemic. And a lot of it has been, for example, in kindergarten, where we think some parents may be just keeping their kids home. So that's one of the reasons why that's what you're hearing from school districts. I think the other challenge is that there is a lot of one-time funding that's available. And in our report, we talk about the substantial amount of federal funding. I think statewide districts have about $20 billion in federal funding. That is one-time funding though, so that's funding that's not available on a long-term basis. And so districts have a significant amount of one-time funding they have available, while at the same time looking at their longer-term enrollment trends, a little concerned about the overall what their budget situation will look like in say 4 or 5 years down the road.
Okay, Laura, go ahead, please.
Hi, good morning. Thank you guys so much for giving this presentation. California has gotten a lot of federal assistance because of the pandemic. Do those federal dollars affect the budget outlook going forward? And I know that this report was written while the Congress was wrapping up infrastructure legislation, but can you speak at all to how recent federal spending bills could affect California's economic outlook going forward?
Yeah, maybe Anne, can you talk about, I think there is somewhat of an interesting story to tell about the role of the ARP funds in particular and how they affect or interact with our multiple year fiscal outlook. As you noted, Laura, the infrastructure bill and the Build Back Better legislation under deliberation now in the Congress were not taken into account in our outlook, but I know your question goes a little beyond that, so I'll kick it over to Anne to see if she can offer some thoughts here.
Yeah, so of course there's myriad and complicated effects of recent federal actions on the state budget. I mean, honestly, most of the really large dollar amounts that you get from like the ARP, the fiscal recovery funds that were in the ARP, and then the coronavirus relief funds that were in the CARES Act have essentially already been committed in recent budgets. And so we don't see, those funds essentially aren't continuing to impact the budget, sort of on a going forward basis, on a multi-year basis. We do have still some effects of, for example, FEMA reimbursements, which are helping the state cover the direct cost of COVID-19 expenditures. And then there's also more federal money that's for enhanced federal match for Medicaid programs in a couple different areas that is also providing budgetary benefits. So there is a lot, a pretty great deal of short-term benefit being provided by federal action. But over the multi-year, actually what you see is one of the reasons that we have significant growth year over year in general fund expenditures is because a lot of that federal money turns off, right? It's temporary, and then the general fund has to kick back in. So that's part of the reason that you see relatively small, one part of the reason that you see relatively small operating surpluses, in the next couple years, but then those grow over time. Oh, and then I don't know, Brian, if you wanted to talk about, kind of the sort of broader economic issue and federal action. I don't know.
Yeah, no, I mean, I think just to say that it's correct that no kind of economic effects are assumed from the recent actions, mostly because of the timing. I think it's fair to say that the federal actions will have some, positive effect on the national and state economy. The extent of that, though, I don't think we can really give any sort of specific to that, but it will, it's not reflected in these numbers. It will be, reflected, next time we do a revenue update in the spring.
Okay, John, go ahead.
Hi, everyone. It's John Myers from the Times. I have a couple of questions. I'll either do them now or get back in the queue, whatever you guys prefer. So the first one is, when I compare your number on figure 1 with expenditures for the current year, for the 21-22 year, it looks like it's about $4.5 billion above the Budget Act. And you probably somewhere, Gabe, in your very smart overview said it, but can somebody just walk me back to generally what the difference is there?
Sorry, in
And-
figure 1,
oh.
which number is 4.5
Figure
billion?
1, your current 21-22 year expenditures is 200.9 roughly. The Budget Act has that at 196.4, and I'm just trying to figure out what do you all account for the higher than under the Budget Act expenses to be?
Yeah, actually, this is mostly going to be a very technical scoring issue. We had, so there was a federal FMAP enhancement for home and community-based services that essentially required the state, that provided the state with about $3 billion in savings, but then required the state to spend a corresponding amount to enhance services in this area. And the way that it was scored in the budget is that there were general fund expenditures of about $1 billion, and then there was general fund savings scored of about $1 billion. We have it scored differently, and probably the way that finance will end up ultimately scoring it, where we're scoring both the full extent of the savings and the full extent of the expenditures, but it puts the expenditures in 21-22 and it puts the savings in 22-23. So on a net basis, you end up better off, but a lot of the numbers are moving around kind of just between fiscal years. That's a major reason. There are others.
So, and if I can, not to get me in the brain freeze then, but just to your point there, Ann, does that mean then that your 22-23 expenditures number is relatively lower than it would have been because of that savings being pushed into that year?
Yes, that's right.
Okay. Can I ask my second question now? Forgive me to my fellow.
Yeah,
questioner.
that's fine, John. Yeah, go ahead.
Okay, I won't take it too long, but Gabe, since you've already teed us up on the GAN limit, let's just go to the GAN limit for a moment. And it's just a broad question, which is there was a substantial amount of discussion last year that the GAN limit, boy, this is the most obvious thing in this world to say, is confusing. And that some of it is not entirely clear how it would work. And there's a lot of elements open to interpretation. And I'm just curious, broadly speaking, does the office agree that there are some places that they're going to be subject to enough interpretation that there's not enough clarity here? Because I feel like if we're going to talk about GAN limit all next year, we're going to somehow talk about, the relative lack of clarity in the way the law is written. And I'm just curious for overarching thoughts on that point at this point from you guys.
Well, I mean, I'll again call upon Ann to maybe give more of a response, but I think like to the broader point, I think what we believe is that a lot of the clearer, more straightforward options that were available to the state were basically taken last year when we thought there was an issue. And that's one of the reasons we do highlight this so much this year, is that we think some of those options have been utilized. And so, this will really be something that will have to be dealt with according to the provisions in the Constitution, subject to, yes, I mean, I think there are aspects of it that are definitely complicated and complex, but we think it's going to be probably something that influences the decision-making maybe even more than last spring. So I don't know, Ann, could you add to that, or?
Yeah, I mean, I think you're right, John. We're in uncharted territory in a lot of ways with the SAL. I mean, I think there's sort of specific areas where there's maybe some ambiguity in the Constitution. There's other areas where, I think we feel like we've got a pretty good handle on what the right constitutional interpretation is. I don't think the issue from our perspective is necessarily the ambiguity, although, there is some of that. It's what we emphasize in that comment about early action, but we do see, just sort of the ongoing trends as being, kind of undeniable at this point. That's why we point out that, over the last decade or so, there's been about a 5% growth in the limit, but about a 7.5% growth in revenue subject to the limit. And the math just sort of becomes inevitable at a certain point. So I think that we're really more focused on that kind of structural issue necessarily than some of these technical issues.
Okay, thanks. I'll leave it for there now.
Okay, Laura, go ahead. You're up.
Hi, it's Laura from the Sacramento Bee again. I just have a point of clarification. I think this was an issue last year when we talked about budget projections, but Senator Tony Atkins has already started calling this a $50 billion available in discretionary resources. And am I correct in understanding that that $50 billion figure would include the Prop 98 funding, right? Because 50 billion obviously is different from what you guys are saying of 31 billion surplus. Could you clarify that difference for me so I make sure I'm understanding the different figures correctly?
Not that I've seen that any of those comments, but our 31 billion is what we traditionally have focused on, and it's the way we've traditionally defined surplus, which is on the kind of the discretionary non-Proposition 98 side of the budget. So yeah. The other point I could maybe add to that is that so compared to the Budget Act assumptions, I mentioned in my remarks that we estimate the state is 28 billion above. The revenues are coming in, going to be 28 billion for the prior year and the current year, higher than what was assumed at the Budget Act. But then if you look, you bring in one additional year for 22-23, the budget year, revenues for the 3-year budget window are actually estimated to be 51 billion above what was assumed at the Budget Act. So I don't know if that's what she was referring to, the pro tem, but it's a similar number, at least, to what you referenced. So,
and of course, I can just ask her office what she means by that. I don't expect you guys to interpret her, but just wanted to lay that
yeah,
out there.
fair enough. Yeah. Mm-hmm.
Thank you.
Okay, John, did you have another question?
Sorry, I still have my hand up. That was a mistake for now. Sorry, go ahead.
Not a problem. Thank you. Are there any other questions?
Am I back in the queue?
You're back in. Go ahead.
I figure if there's not another question, I will ask the other question.
Okay.
Sorry, I didn't want
Go ahead.
And,
That's
and
all
it was
yours.
just asking to broadly go back a little bit, if we could just elaborate on, the good fortunes that the state is here, because often in these discussions through the years, we talk about high income earners. But as I heard you say, maybe this is where the elaboration could be for a moment. This is much more broad based than that. You're seeing things that aren't just wealthy people's stock returns.
I think that's right. I mean, Brian, do you want to add to that earlier comment?
Yeah, I mean, I think the incomes of higher income folks are definitely still a big part of the story here. I mean, the fact that the stock market is has doubled since it kind of hit the bottom last spring, and some of the unprecedented flow of investment into tech startups in the Bay Area, those are kind of similar stories that California's had in past years, and those have intensified. Some parts of this that make this, this surge more broad-based in particular is on the sales tax side, where we're seeing retail spending has, grown double digits this year, kind of, again, an unprecedented level of growth that we're seeing in retail spending. And so, that is, I think a more kind of a broad-based increase.
Brian, would you say too, part of that could be a reflection of there's been significant, federal and state, but federal fiscal stimulus and checks that were sent out. And I think it probably helps, people across the income distribution to have a bit more buying power perhaps than they would otherwise.
Yeah, I think that's certainly an important part of that story.
Okay, do we have any more questions? Okay, Gabe, I see no more questions.
Okay, well, thank you everyone for your interest in the report. We're happy to respond to questions separately from this session. So again, you know, hopefully how to reach us, and thanks again.